Want to start investing but don't know where to begin? I've got you. In this video, I'll break down exactly how I would start investing from zero. These steps work even if you have no experience. Let's get right to it and make your first fast cash moves together. Before you buy any stocks or crypto, your first move is building an emergency fund. Aim for 3 to 6 months of your basic expenses in a high-yield savings account. This keeps you safe if you lose your job or your car breaks down. Investing is about building wealth, but it's also about protecting yourself. It can be easy to get excited about the idea of making money, but when you really need it, this cash can be a lifesaver. It's time to open a brokerage account. There are lots of options to choose from, but just make sure whoever you pick that they have low fees. I recommend Robinhood for its easy-to-use app and the ability to trade both stocks and crypto. Once you have your account and have money deposited, it's time to begin. For your first investment, I personally love index funds. Index funds give you instant diversification across hundreds of stocks. Look up funds like VOO or VTI. These track the overall market, which historically grows steady over time while limiting risk that comes with investing in just one company. Alright, so let's say you've got your emergency fund set and you're already putting money into index funds. Awesome start. But maybe you're curious about picking individual stocks to spice up your portfolio and potentially grow your wealth faster. Here's my take. Stick to what you know. You don't need to chase hype stocks or gamble on companies you don't understand. Instead, look at well-known, strong companies you already use and trust, like Microsoft, Apple, or Nvidia. Why? Because these companies have proven track records, strong balance sheets, and real products people actually use every day, like your Xbox, your iPhone, or the AI chips everyone's talking about from Nvidia. The key here is to invest in companies you believe will still be strong in 5 to 10 years, not just what's trending on TikTok. This way, you get to learn about the stock market while still managing your risk and building wealth over time. Remember, even when picking individual stocks, don't put all your cash in just 1 or 2 companies. It's still smart to diversify while letting a few of your favorite companies grow with you. Now, you might be wondering, how much should I actually put into these individual stocks? Great question. Here's a simple blend I would use as a beginner. 50% in index funds like VOO or VTI to give you steady, diversified growth without stress. 40% in individual stocks like Nvidia, Microsoft, Apple, or other strong companies you understand and believe in for long-term growth. 10% in cash in your brokerage or high-yield savings so you're ready to pounce on opportunities when the market dips or you find a great deal. Keeping 10% in cash means you're not forced to sell when the market drops and you're ready to take advantage of market moves without scrambling. This blend helps you grow your wealth while letting you learn about the market, all while staying prepared to make your next fast cash move when the timing is right. The next big question is, when and how often should you buy? Remember that consistency beats timing the market. Automate your investments, even if it's just $50 a week. You can set this up in your account to whatever time interval you want. This builds a habit and helps you dollar cost average, meaning that you're buying in during market ups and downs. It also takes away having to remember or worry about your account. Just automate the investments and enjoy not having to think about it. So investing is really that easy? It can be, but here's where most beginners mess up. Panic selling when the market dips, or trying to get rich quick on meme stocks. Make sure to keep these few tips in mind. First, program your mind to think of down days in the market as opportunities to buy lower instead of dreading looking at a lower balance in your account. The best days in market history often follow the deepest declines, and the market in the long term trends up. Second, if a stock or crypto feels too good to be true, it likely is. Meme stocks and crypto can often be targets for people to boost up the price and then sell it all to cash in on their profit. Avoid this with keeping focused on the long term. Remember, investing is a long game. Stick to your plan and avoid hype chasing. Those are the exact steps I'd take to start investing if I was starting from zero. The toughest step is to get started. It's never too late to invest, and you will only regret waiting. If you want more beginner-friendly investing tips, passive income strategies, and fast cash moves to grow your wealth, hit that subscribe button and turn on notifications so you never miss a money-making tip. Let's grow together.